Okay, so in this session, we are going to discuss question 7.3, okay? So this one's got a bit more of what a question would look like in a test or in an exam, okay? So this will incorporate your other sections, learning units that you've already covered. You would also have to apply now. So when you study a learning unit, you cannot study it on its own. You need to understand how to add all of the learning units together. But to be able to do a question like this, you need to understand each and every learning unit so that when you get the calculation, you know how to apply it. Now, generally, the income is the easy part. It's the expenses and the capital gains that generally get students all muddled up. So you need to know the basic rules to apply it. So even if you don't get 100% perfect, if you know the basic rules, you can generally get between 70 and 80% for a question. We normally have about 10% is difficult in the question, and the rest is fairly straightforward if you understand the rules. Okay. But I know you guys are just working for 50. So we will help you on how to get to the 50. I would like you guys to do better, but I'm going to be realistic about what your expectations are. Okay, so in this question, it's on page 113 up to 115 in your workbooks. So if we scroll to the end of the question, let's quickly see what you had to work out. So they ask you to work out your normal tax payable. Okay, now normal tax payable is your normal tax calculation. So that means your taxable income at 28%. Okay, unless it's a SPC, then it would be a different rate. But for the payable portion, you would still have to deduct any prepaid taxes. And that they generally show towards the end of the question if there's any prepaid taxes. So that would be your provisional tax payment. You would reduce it to work out what is then the tax payable. Okay, so by just understanding what the lingo tells you, you already know how far in the calculation you need to go. Then they tell you it's at the end of 31st of March. So that means our tax period runs from 1 April 2020 up to 31st of March 2021. Okay, so that's our tax period. Now, the reason we write it down is in the exam, they could potentially put a prepayment component in there, and that is why you need to know the date range. Okay, for that specifically. Then they tell you to ignore the rollover provisions of paragraph 65 and 66. Now, what the rollover provisions say is any recoupment amounts. If it was an involuntary disposal, which is 65, or a voluntary disposal for 66, and you were allowed to get capital allowances for them, and you acquire a new asset, then you can defer that recoupment over the same period as the original allowance. Now, because they tell you to ignore those provisions, you include the full recoupment amount in the question. Okay. Okay, so then if we scroll up, let's see what information do they give us. Okay, so they tell you we manufacture plastic pipes. So remember, if we are a manufacturing company and we are not a small business corporation, that would mean that the Section 12C allowance would be applicable. Now, what that means is that 40%, 20%, 20%, 20% that you deduct. Now remember, with that allowance, it is not apportioned. So even if I buy that machine literally a few days before the year end, I can actually claim the full deduction for that year, irrespective of how many days I've used it for. Okay. Unlike your section 11E, which is your normal wear and tear allowances where you have to go apportion it. So that means I have to go work it out for the period I physically used it. Okay, so let's see what information do they give you. They tell you the net profit for the year was 2.566, 350,000. Okay, so that is going to be your starting point. Then your repairs and maintenance. Now remember, repairs and maintenance is deductible unless it is an improvement, then it is seen as capital in nature. So we don't get a deduction in your taxable income calculation, but you would add that amount to your base cost when you dispose of that asset when we work out the capital gains. Okay, so that is what you have to read out for if you see anything repairs and maintenance related. So let's see what they say. Oh, let me quickly just plug in my laptop. So we only did those questions. Yes. You don't have to keep it. You can give it back if you don't want to, but I want you to go look at what you did specifically.
So the other classes that are face to face that you said